In 2024, a stranger with a forged signature nearly stole one of the most famous homes in America, Elvis Presley's Graceland. A fake lender claimed Lisa Marie Presley had pledged the estate for a $3.8 million loan, published a foreclosure notice, and scheduled it for auction outside a courthouse in Memphis. Here's the part that should scare you. Graceland had a team of lawyers, accountants, and financial advisors watching over it, and the scam almost worked anyway. So if it can almost happen to Graceland, what happens to your home with none of that protection watching over it? Today, I'm going to show you exactly how this scam works, what it actually can and can't do to you, and the protection you probably already own. You just don't know it yet. Welcome back to Smart Finance. Let's get into it. In 2018, a fraudulent lender claimed Lisa Marie Presley had pledged Graceland as collateral for a $3.8 million loan. They had documents. Over several years, they built a claim against the estate and eventually published a foreclosure notice in a Memphis newspaper. Graceland was scheduled to be auctioned off outside the Shelby County Courthouse on May 23, 2024. There was even an extortion attempt layered on top. Pay us, and this goes away. But there was one massive problem with the whole scheme. Lisa Marie had passed away over a year earlier, so there was no one immediately available to refute the claim. Her daughter, Riley Keough, sued to stop the sale, arguing her mother's signature had been forged. One day before the auction, a judge issued a temporary injunction, not because the evidence was overwhelming yet, but because Graceland is a national landmark, and everyone wanted absolute certainty before it changed hands. An ordinary home, a day before auction, likely wouldn't have gotten that same benefit of the doubt. The FBI and U.S. Postal Inspection Service got involved. 3 months later, they confirmed the forgery and identified the person responsible. Not a criminal mastermind, just a career con artist with a history of bad checks and identity theft who found an opening. So here's the real question. If this can almost happen to one of the most protected properties in America, what happens to an ordinary homeowner with none of that protection? In April 2025, the FBI's Boston field office issued a direct warning about this exact type of fraud and who it targets. Their words, not mine. Retirees who own their homes free and clear are the primary targets. Not a maybe, a direct warning in writing. 3 things shift the moment your mortgage is paid off. The bank's lien comes off your property. Your title becomes fully free and clear. And you become the only one watching over your own home. To you, that's freedom. To a fraudster, that's an opportunity. Because a successful claim on a paid-off home isn't worth tens of thousands of dollars. It's worth hundreds of thousands, sometimes more. Retirees get targeted disproportionately because their homes are paid off, appreciated in value, and they've often lived there for decades, which means their guard is naturally down. Nearly every version of this fraud starts the same way. A criminal fills out something called a quitclaim deed, often through an anonymous LLC, forges the homeowner's signature, and files it with the county. Quitclaim deeds are ordinary, everyday paperwork, usually used to transfer property between family members, which is exactly why the system makes them easy to file. County clerks aren't required to verify identification. Their job is to process paperwork, not investigate it. That's the loophole. Once the forged deed is filed, criminals typically cash in one of 2 ways: taking out a home equity line of credit and disappearing with the money, or if the home isn't lived in daily, renting it out and pocketing the deposits. That's exactly why second homes, rental properties, and homes of people who've recently passed away are the easiest targets. Lisa Marie Presley fit both categories at different points. If this is new information to you, do me a favor. Tap that like button. It helps YouTube put this in front of more retirees before it happens to them, not after. Now, here's the part almost nobody talks about. A claim built on a forged deed is legally void. Courts are explicit about it. A forged signature can't transfer legal ownership, no matter how convincing the paperwork looks. In the eyes of the law, your name stays the name on that title. The real damage isn't losing the house outright, it's the cleanup if someone manages to borrow against it using your forged signature. You'd need to prove the fraud, clear your title, and unwind any loans. That can mean months of your life and real legal expense to fix a problem you did nothing to cause. The FBI has tied this type of fraud to roughly $1.3 billion in losses across more than 58,000 victims between 2019 and 2023. Real numbers, climbing every year, but not the everyone's house on the block epidemic some ads want you to believe. Before you pay for anything, check what you already have: owner's title insurance. Most homeowners bought this at closing, and unlike the lender's policy, which does expire once your mortgage is paid off, the owner's policy generally doesn't. It typically stays in force for as long as you or your heirs hold interest in the property. This week's homework: dig out your closing paperwork, or just call your title company and ask directly whether you have an owner's policy and what it covers. And on those title lock subscription services you've probably seen advertised, the FTC said plainly in 2024 that a title lock is not a lock and not insurance. It doesn't stop fraud. It only notifies you after it's already happened, something you can check for yourself for free elsewhere. Protect yourself this week. Sign up for your county's property fraud alert. Rot your mail, check your deed once a year, and freeze your credit at all 3 bureaus. If this helped, subscribe more retirement videos. See you in next time.